G'day legends, Bitcoin is currently retesting the major macro support at 98 to 100,000. The breakdown of this major level will result in not only the beginning of the bear market, but another macro correction. We are going to be discussing macro targets, what the buyers will need to do to reverse this current downtrend, and how the macro charts are developing from both a technical and a structural perspective. With the current breakdown of the RSI and 50 EMA, things are looking very dire, and with just 3 days remaining until the weekly candle close, the bulls do not have much time to reverse this trend. In today's video, we are going to be discussing everything we just mentioned, as well as diving deep into the total cryptocurrency market cap, the altcoin market cap, and even Bitcoin dominance. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment in the free channel for more information. Let's go ahead, guys, and jump into the content. So, as you know, Bitcoin has been in a downtrend now ever since the 6th of October 2025. Now, the 6th of October was the exact top according to the 1064-day bar theory, which is the theory of the 4-year cycle, meaning essentially the bottom to top distance, the bottom to top date is 1064 days. This is a theory that has been long since established and has been proven in the prior cycles to hold a degree of validity. Based on this theory, we can also project when the exact bottom will be for Bitcoin, looking at, of course, the total expected length of each cycle in the 4-year cycle, and then deducting the 1064 days to then give us the expected length of the bear market. We'll be doing that in today's video as well. Let's start on the market data, 24-hour volume and liquidations. We've seen a bit of a surge in liquidations over the past 24 hours and volume up 28%, 375 billion here. Liquidations jumping up a whopping 30%. We're sitting over 500 million in long liquidations and 150 million in short liquidations. Again, as Bitcoin continues toward the downside overnight, again, we saw those rejections on the daily chart from that 108k level, printing yet again another lower high, resulting in another drop into that sell side liquidity, this time actually sweeping the low of that sell side liquidity level, temporarily dropping below 98,000. So this is a critical point of support, and the probability for bounces over here begins to increase. There's a chance of a short-term reversal. We'll be discussing it in today's video, but if we lose this level, we are going to see a whole lot of pain for the rest of the market. Again, we'll discuss all of this in the video today. Let's go over to the market data. The DXY currently sitting under that 100 level. We have seen some shifts in expectations for interest rates. If we take a look at that, we have seen the probabilities actually drop more in favor of an interest rate pause. There is discussions that we may see a pause in December for interest rates. If we do see a pause in December for interest rates, this will have a overarching bearish tone, particularly since we have just seen 2 consecutive interest rate reductions. It would lead to, again, the assumption that inflation is starting to speed up, or they do not have a clearer picture of how the economy is developing, partly due to the government shutdown. So the safer bet is to go for a pause. Either way, anytime we see interest rate pauses occur after interest rate reductions, that does have a slight bearish tone, as it suggests a degree of unpredictability and uncertainty going forward in the economy, because if they did have certainty, they wouldn't be doing that. So that could develop into more of a bearish narrative, which could actually bring the markets down further if we see that develop. All in all, the DXY is sitting under 100. If we break above 100, that is 100. That is going to be confirmation that we will likely see continuations lower for the risk asset market. The S&P 500, we talked about the S&P 500 in our prior video. We talk about it a fair bit. It is still not looking amazing. If we go over to a weekly chart here, we can see we've had some real signs of weakness developing. Marcus over B printing some red dot prints over here. On the daily chart particularly, which is the one we're looking at, we discussed in yesterday's video that there was a risk of a lower high being printed over here, and we have seen that lower high print. So this is a reversal pattern over here. We've got falling momentum, we had rising price at a bearish divergence, we had deviation from the range high breaking back below the change of character, we had mean reversion complete at the 50 EMA, and now we've created a lower high. This is a reversal beginning. This means that it is expected that the S&P 500 will continue lower here, but the trigger point is the 50 EMA. So break the 50 EMA, expect this downward move to resume, or to begin, should I say. If we want to see the buyers reclaim control, the only price point I'd be confident the buyers are back is breaking simply above that prior high point. Until then, between the high and the 50 EMA, we are neutral to bearish, okay? Lose a 50 EMA, we turn full bearish, expecting higher time frame corrections for the S&P 500, and that would potentially mark this as at least the local top. That is it, guys. Let's jump over to Bitcoin. Before we do, go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll get a lifetime trading fee discount on 15% off all your trading fees. You'll support me making the content. And of course, you'll be trading on exchanges I use and I trust. In addition, you'll get access to every single monthly campaign and giveaway we do. We currently have a $60,000 monthly giveaway at the moment. You can go ahead and find more information about that in the pinned comment of the free channel. We'll play an ad and we'll see you back in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Hey legends, let's go ahead and jump into it. Now I want to start by taking a look at the 4-year cycle and the potential risk of us entering another bear market, right? And I think the word bear market has such a bad connotation attached to it. Everyone's so scared that people don't like to imagine the idea that asset prices go up and they come down a little bit and they go up again. On the macro scale, if we zoom out to the macro, as long as we have an inflationary currency, the dollar, the US dollar, the Australian dollar, whatever, and we see the value of our currencies erode over time through inflation, through excessive government spending, through a whole range of other things I'm not going to be talking about today, we will likely see asset prices which are valued against those same dollars rise in price. That doesn't mean we see permanent increases. The market moves in waves. It has upward legs, it has downward legs. And those downward legs, although can be scary if are unpredictable, unexpected and unplanned for, they actually provide people with opportunities to get ahead of the curve. Because if you can anticipate them and capitalize on them, you are getting ahead of the majority of people who do nothing and simply hold. So they are actually good opportunities and they can be utilized very efficiently to actually not only secure your overall value, overall portfolio value, but actually enter at lower prices and again build a greater position size, which likely results in more dollars generated as the market eventually bounces on the macro scale. So I don't think the bear market is something to be scared of, but there is a real risk we enter a bear market here. Of course, we have the potential narrative shift for interest rates moving to a pause from an economic perspective. We have more talks about tariffs coming back in. There's a lot of catalysts brewing over here, which could cause downward pressure on the markets. But when we're looking solely from a technical perspective and a theoretical perspective, we can look at something like the 4-year cycle and the plethora of different indicators within this cycle, which have been utilized to project not only when the bottom will occur, but when the bear market has prior begun and will likely begin again. So let's just start by taking a look at the 4-year cycle, and then we'll break everything down. The 4-year cycle is simple. The 4-year cycle is this lower section here. Cycle 1, cycle 2, cycle 3, of course we had the cycle prior. This is just the ones we're seeing visibly on the chart over here, the 3 cycles. The 4-year cycle is generally around 1,430 days in length. You can see 1,430, 1,430. Each cycle is made up of 2 different parts. We have the bull run, or the upward phase, and then we have the bear market, the downward phase. Put very simply, we also have consolidation phases, but we're not going to get into that, okay? What we have seen historically, from bottoms to tops, exact bottoms to tops, is we have seen 1,064 days. The 1,064 day bar theory is a theory that has been around for a long time. It is simply taking the average amount of days from the low pivots to the high pivots on the macro chart, assessing for the average amount of days and then applying that forward. In this instance, it is 1,064 days with an average standard deviation of 5.86 days, meaning not every single top is exactly 1,064 days. When we apply the standard deviation, it comes to around 1,064 as an average. If we take a look at how this can be projected, looking at my Twitter over here, we talked about this in, February 2024. We talked about the 6th of October being a macro top for Bitcoin. And that actually ended up being the top for Bitcoin, the 6th of October at 126,000. Over 2 years, nearly 2 years in advance, we called that, and the market has dropped 21%. So again, it is following that 1,064 day bar theory. We've done all the mathematics here to discuss what it means and how it works, but the most key important takeaway is the 4-year cycle is playing out perfectly. The top was as anticipated. If we see a new top develop prior to the 5th of October 2026, so a new top develop prior to the 5th of October 2026, the 4-year cycle pattern will have officially broken, okay? It will have broken. So, according to the 4-year cycle, if we then deduct the 1,064 days from the total 1,430 days, we have around 365 days remaining until the bear market bottom, which has been basically the standard through both prior bear markets, around about a year, which takes us to the 5th of October 2026 as a potential bottom date for Bitcoin. The price of the asset at that point will likely be somewhere between 36 to 52,000 USD. Let's go ahead and now talk about what is triggering the bear market from a technical perspective and what we are watching for on a macro, and then we'll jump into the short term and the total cryptocurrency market cap. So from a 2-week perspective, first and foremost, we have a few things. Starting on the logarithmic chart, we can see this uptrend on the price action has been broken. This is going to be our rising wedge formation. This is a very clear structure over here on the logarithmic chart. This is our rising wedge. As we know, rising wedges need 3 points to validate, 2 on one side, 3 on the other side, 1, 2, 3, 1, 2. We have a valid rising wedge when the price action rising while it is compressing against a uptrending resistance and a uptrending support. Eventually, the breakdown results in a measured move from point 1 to point 2, which could take us into a low point, potentially as low from the breakdown point of around 47,000, which of course takes us well and truly in between that 36 to $52,000 range. It takes us basically smack bang right in the center of that at 47,000. That would be an expected target. Not only are we seeing the breakdown in that, we are seeing the loss of the RSI uptrend. The RSI uptrend is very important. If we remove everything from the chart very quickly and simply take a look at our bull market support band, we can see that every single time we have bounced from this RSI trend line, we have noticed the price has also bounced from the bull market support band. However, in 10 days from now, we have the 2-week candle close, and we are seeing the price drop below the bull market support band, and we have already seen the pivot below the 2-week RSI, suggesting that we are likely going to be closing below this $104,000, $103,000 level. Now, this is pretty significant because 103 is underneath, right? It is underneath 108, and 108 is the trigger point the bulls will need to get the price action over to turn bullish again, meaning while we remain below 108,000, the probabilities are massively in favor of downward continuation. So it is not looking fantastic over here. If we take a look at the prior top, we can also see a similar pattern. That is, of course, this RSI uptrend. We broke the RSI uptrend. We held at that bull market support band for 2 weeks while the RSI was dropping before the price came down. So there is a chance we consolidate around 98 to 100,000 for a little bit before the price then comes down. That will be acceptable because that is what we have seen in the past. Let's take a look at the weekly chart now. Now, the weekly chart is really when things start to get interesting and very important. If we look at the weekly chart here, we can see in prior bull runs, let's go to the weekly chart on our 4-year cycle, we have got two indicators, two very important indicators, which has marked the beginning of the macro downtrend. Number one, it is the 50 EMA. Number two, it is the Gaussian channel. We can see the loss of the 50 EMA and Gaussian channel over here resulted in a bear market. The loss of the Gaussian channel and 50 EMA resulted in a bear market. The loss of the Gaussian channel and 50 EMA resulted in a bear market. We are seeing that happen yet again with 3 days remaining on this weekly candle. If the weekly candle closes below $100,000, we are going to see the loss of the 50 EMA and the Gaussian channel in conjunction with the breakdown of this horizontal level in the RSI level we've been talking about for like a month and a half now, which we have seen historically act as essentially the bull market support in terms of momentum. If we want to look at support in terms of price, we can see that. If we're looking at momentum, this is the low for the momentum through the entirety of this macro uptrend. This would be a negative momentum shift with the breakdown of the Gaussian channel, with the breakdown of the $198,000 level. We have so much confluence to suggest the market is going to be going lower. This would be a massive warning sign and initiate the bear market. The worst case target, so that targets we're looking midline, lower band, and 200 moving average. So as you can see, the bear market has a massive risk of coming. There are some major warning signs you need to be paying attention to, and we're going to be watching these very closely. And it all comes back to this chart right now, and it's even more important as we are coming in to retest 98 to 100,000. I want to flip the chart for a second because you can see when we invert the chart, sometimes your expectations begin to change. If we draw out our horizontal levels on this chart, we are going to be drawing out something like our buy side liquidity up over here, which is actually our sell side liquidity when we invert the chart. And this is going to be a very important target if Bitcoin does actually break this resistance. This is going to be a resistance we have remained below ever since May 2025. If we flip it, okay. Oh, I just changed my time zone to a completely different country. Let me just quickly change that back. Where is my country? Australia. There it is. Okay, let me just quickly flip this chart really quickly. You can see a major point of support, right? If we break this level, where would we expect the price action to go? We'd expect it to go upward. Now, another way to look at it, if we have this uptrending support and we have got higher lows that we have been creating the entire time, what does that mean? It means the trend is facing this way, and therefore we are expecting the price to move in that direction while this trend holds. So what do the buyers need to do to eradicate this selling pressure? Very simply, they need to break above 108,000. By doing that, we will see the breakout of the downtrend, we will see the breakout of a lower high, which is this lower high point, and we will see the reclamation of the Gaussian channel and 50 EMA, and avoiding the breakdown of those levels we just discussed, preventing us from entering an immediate bear market. Until that happens, it is looking very grim. If we lose this level, our expectation is this low. Even if we see the price bounce back up and then come down, that is perfectly fine, right? It doesn't really matter what happens for Bitcoin if we drop below this level. While we remain below 108, the expectations are an immediate drop. If we break 108, we have still got many resistances above us that we need to break out before running the risk of actually breaking the 4-year cycle and creating a new all-time high. Some of those levels are things such as 116, 118, and 120. This is a major point of resistance. So we could see a drop in, a rally, and then a continuation lower. That is definitely a possibility. Until we break 120, the probabilities are still in favor that this was a top as expected by the 4-year cycle. That doesn't mean you can't trade upward directions, right? You should be trading all these directions. We shouldn't have biases as traders. I don't have biases. If you're a trader, you should focus on the only thing that matters, which is the percentage return after entry to exit, not the direction, not everything else, not bias, not what you want to see. We're trading the market for what it is. So we will adapt and we'll trade as anticipated, or as should I say, as the market suggests as it develops. So at the moment, guys, some real risk factors. If this level is breaking down, we're going to see some major moves toward the downside. But I will very much like to stress, this is a support. It is 100% a support. Not only just it is a support, it is a massive point of support. And this is where bounces will likely develop from, if the buyers are able to absorb the selling, okay? If we bounce over here, expect potential retests. Expect even 108,000. But if we fail to do so, the consequences are going to be extreme. So I think for me personally, you can look for you got two options over here. You can enter long positions and you are accepting the risk that we could see corrections, and the risk return is definitely there. You know, there's a higher probability you get stopped out, but if you don't, we're going to see maybe some pretty good bounces for Bitcoin for the next few days. But then the risk factor is that if this level breaks, we are going to see significant pullback. So sometimes waiting around is actually the best thing to do. Waiting for that weekly candle, watching to see how we close around over here before making a decision, that might be an ideal strategy to go forward with. Again, you have to decide what you want to do for yourself. Moving over to the total cryptocurrency market cap before we wrap up, not looking good, as we said already, guys. Our targets for the total cryptocurrency market cap are 3 to 3.05 trillion. We are about halfway there from the breakdown at 3.65 trillion. Again, if Bitcoin does see the breakdown at 98, we will likely see that move develop, and that is going to be a very realistic target. If we see that happen, well, then the 200 moving average becomes a real possibility, so pay very close attention to that. We're watching that very closely. As for the altcoin market, it is retesting the 50 EMA. This is a point we have bounced a few times from. Very loosely have we respected the EMA over here, because the altcoin market is a lot more choppy. But nevertheless, it is a point of significance. We are watching the reaction over here. It is also at the 940 billion support. So watch that. If we do drop over here, expect downward corrections into around 780 to 800 billion. I'm going to leave it there, guys. Thank you so much for tuning in. Have a fantastic rest of your day. We'll catch you guys likely in tomorrow's video. And hopefully by then we've seen some reactions in the market. And if not, we'll catch you guys again after tomorrow's video on Monday, which will be the weekly candle close. A big moment, guys. I think the next few days are going to be very big. As Bitcoin approaches these major pivot points, everything gets a lot more important. So really pay attention. I'll catch you guys on the next one. Bye.